Hi, this is JG and I am here with Joyce Talk. Doesn't it look like a pandemic? Of course, affecting economies across the globe. In today's video, my focus is on the current world economic situation, which is kind of gloomy, right? It is almost identical to the COVID crisis, which galloped across the world and left humanity reeling for almost 2 years now. At the onset, let me clarify that nothing in this video constitutes professional and/or financial advice. Inflation is rising, stock markets are crashing, currencies are fluctuating, Bitcoin is plunging, Western sanctions are backfiring. The global economy shrank by almost 4.5% in the pandemic years and was expected to grow 4.5% this year before inflation began to bite. The new forecast for growth is down to 3% and inflation estimates have doubled to 9%. This too, after more than 50 central banks have already increased interest rates by 50 basis points, sacrificing growth to contain inflation. And it is happening across countries. This is an uncharted territory for America. Their inflation is more than 8%, a level last seen 40 years ago.
New inflation numbers are out tonight, and they show the pain has not peaked, but is still getting worse. The U.S. Labor Department reports consumer prices rose 8.6% in May compared with a year ago. That marked the biggest increase in more than 40 years, going back to December of 1981.
In last 2 quarters, NASDAQ is down by more than 29%, S&P 500 by more than 21%, and Dow Jones by more than 16%. So the Fed is almost in cruise control. They are hiking interest rates every month, latest being by 75 basis points on Wednesday, the biggest hike in 28 years.
Tonight, the Federal Reserve announcing the largest interest rate hike in nearly 3 decades. Raising rates by 0.75%, trying to cool off an overheating economy and bring down record high inflation.
This Monday, it was bloodbath in India. The NIFTY and SENSEX slid down by more than 2.6% and investors lost around $76 billion. This perhaps a collective result of rising inflation, feelers from the US Federal Reserve, and the weakening rupee. The Japanese yen is at 134 per US dollar, yet the lowest in more than 2 decades.
Today, we're looking at Forex markets, the US dollar versus the Japanese yen. We've seen a massive gap really between benchmark yields in Japanese and US dollar debt. And what we've really noticed is just a massive rise over the last month of the US to JPY. We really saw a peak actually this morning at around 135 Japanese yen to 1 US dollar. It's actually let up a little bit intraday so far, but either way you cut or slice it, Kiko, you've seen a lot of interest rate differentials as the Bank of Japan remains essentially stuck where it's at right now, and the Fed aggressively raises interest rates to get ahead of inflation. That's a big reason for what the movement we've seen in this
and the
space.
Japanese yen at a 24-year low.
In last 6 months, Japan's Nikkei dipped by 7.41%, South Korea's Kospi is down by 18.77%, and Hong Kong's Hang Seng fell by 10.12%. Same story everywhere. In the month of March, Britain's GDP fell 0.1%, In April again by 0.3%. Experts guarantee economic stagnation.
Yeah, I'm afraid it's quite bad news. We were due to get the state of the economy, gross domestic product, and how much it's expanding or contracting by. This is the best measure of just how well we are doing. You know, it's a measure of how much income is being generated across the economy. The previous month, which is to say March, those are the previous figures we had, showed a contraction of 0.1%. Well, the latest figures show a contraction of 0.3%. Let me just show it to you on this chart here. Here you can see it. There was minus 0.1% in March, and in April it's down by 0.3%.
The pandemic and now the war has battered the Egyptian economy. They will have to spend $10 billion in fuel and food, a lot in these hard days. Currently, Pakistan is the second worst performing market in Asia and could end up worse than Sri Lanka. Last Thursday, more than 16%, equivalent to 1.35 trillion Pakistani rupees and close to $4 billion US dollars of investments were wiped out of the stock exchange. Pakistan's current external debt is more than the GDP of Sri Lanka, Nepal and Afghanistan combined. Sri Lanka owes the world over $52 billion. The government says it needs $5 billion over the next 6 months just to get basic supplies. 40% of the Lankan society are making an average of $74 a month, which is not enough to buy basics in a country battling a double-digit inflation. Just look at what's happening in Russia. Thousands of sanctions companies winding up operations. It's basically a stranglehold. The war in Ukraine too has been taking some very interesting turns. Can we avoid a recession? The answer also depends on what happens in Ukraine. If the war drags on, so will the economic pain. Oil prices will remain high, food shortage will persist, and more countries will feel the pinch. That is all for today. Thank you for watching. Goodbye for now. Stay blessed and see you in my next episode. Thank you.